What's up, everybody? Now, the question, is it better to build or buy? Well, I have one of my students and friends, Matt Wallace. We did an episode together where we covered just that, where he shares his journey and how he got into self-storage and what he's done through expansions, buying, and looking at the two. Also with the opportunities to pull off exact strategies like that. Now, this is a fabulous episode. In fact, it's one of our top 10 ever listened to. That's why we're putting this one out again, because it is so important. And we're so grateful that Matt came on to share his experience of getting into this industry. And so we can understand from his perspective the difference between buying and building.
We started filling up crazy fast. I mean, we did 285 units in 82 days. We were 100% full, nothing left.
Wow. Now, you bought facilities and you built facilities. What are the pros and cons from starting that way? If you're still newer in the game and everything, building versus buying. Welcome everybody to Self-Storage Income. And we are here at the Coeur d'Alene Resort for the Self-Storage Income event, which so far has been awesome. And Matt, thank you for coming on. I'm glad we got here and we could do this in person. This is way better than doing on like a Zoom or something like that. I prefer that too. Right? And I'm really excited for you to come on. Because you've been growing fast, and yet you're doing it also in a way where you're finding niche properties. You're looking at building, right? So you're approaching, I think, self-storage in multiple ways, but you're doing it not on your own, but it's you.
Yeah. And
you're figuring it out. You're trying to say, how can we get into this? And you don't have big partners. You're not in huge cities, No. It's not like you have major capital backers that are like, oh yeah, we're going to do it. So walk us through, first of all, what got you interested in storage, period. But then how did you go from, you're really interested in this to how do we then execute?
Yeah, so I mean, first going to storage way back. I grew up in a small town in Brookings, Oregon, and actually had a childhood friend. His dad had built one in the 80s. Yeah. And my family had a few rental homes, nothing, they were school teachers. So we didn't have any big real estate portfolio, but a couple rentals. So I was kind of familiar with it, but always saw the headache. And the longer I was around this friend growing up and his family, it just seemed like this great property. His dad always said, we never do anything. I mean, they were those perfect owners they were not raising prices, they were not paying attention, but they were still making money. I mean, they just ignored it and they were fine with it and happy. So I kind of had always been aware of it, but I really, that same thing of having no idea how to get into it. As I got older and decided to get into real estate, wasn't able to start right there, even though it was in my mind. I started with a 4 or 5 plex.
Was there any motivator to get into it? Was it just something you hey, this is a great way to create wealth? Or
So I've always wanted to make sure that I had built some kind of stream, whether it was an investment property or storage or something where I wasn't having to show up every day to generate the money. So there's always been probably that running, but still, I mean, I got to tell you, I really thought this is years ago, AJ, though. I mean, this is 7 years ago, and there were people talking about storage, but not the level they were now.
No.
And so I would kind of know it's good, but I had to keep digging, and I was doing a little bit more, but it really wasn't a clear blueprint of what to do.
Yeah.
So at some point, what happened actually was some friends challenged me, and they knew I'd saved up some money, but they're like, well, you're just going to sit on this forever? You need to do something. And then that's kind of when I just bought this 5-plex.
Yeah.
Got into it, worked on it. Then, my wife and I continued to do a 6-plex and a 4-plex, and we did some other property. Well, in the middle while we were doing that, we kept looking for storage, looking for land, looking for an existing one, always looking. But again, I was running into this hurdle. What you could easily find with a broker might have been out of our budget at that time, $3 million, $4 million, whatever. It was out of the budget at the time. And I didn't have all that set up. Well, finally an opportunity came along where someone new had found 2 acres, seller financed, only $100,000.
Yeah.
Cheap. This was the in.
Yeah.
It was zoned right, ready to go. And that actually, we started construction first of all the facilities.
Okay.
Now, it took a little while for that to get going because, I tell people like that was the biggest lesson I think I ever had because it was every problem you could have. I mean, we had wetlands, we had COVID in part of the building, we had everything was raising us. Wetlands, if you're not familiar, sometimes you have to buy off the acreage at a land bank. When we started the project, it was $70,000 an acre. By the time we had to pay, it was $130,000 an acre.
And this is in Oregon, wetlands.
Yeah, Oregon.
In Oregon.
Yeah, in Oregon. Some other places.
So you may be sitting here going, "Oh, I've dealt with wetlands before." Well, not like you have in Oregon. So
yeah, and so there was just so many delays and issues. But once that kind of came online, then we bought another facility. And then it was been 18 months later, we bought another one recently. So, I mean, that's kind of the high level.
Yeah.
But the process through all that was once the building started on that first facility, it was 35,000 square feet. Things went smooth. I'm not going to lie. It was a nightmare before. But once the building started, it went pretty smooth.
Good.
And then I knew that I would work harder than any call center at filling it up.
Yeah.
And so I was the one that had all the calls routed to my phone.
Yep.
And I did that fill up because I also really wanted to understand it. And we were doing everything. I mean, Google ads, Facebook ads, Facebook free posts, because we have a big community group. I mean, I even made 5,000 door hangers that had QR codes for apartments and everything.
Yeah.
But we started filling up crazy fast. I mean, we did 285 units in 82 days. We were 100% full, nothing left.
Wow.
And so the best day I had was 12 rentals, 12 closings in a day on our own. And this is a town of 50,000. So it's decent, but there was 12 other facilities. I mean, we have a lot of facilities in this town.
Yeah, 12 in a day. There's a lot of people that wish they could get that in a month right now. That's amazing.
Yeah. So we really filled that up. And then what happened though, I mean, again, you learn along the way. I was doing anything to get people in. You need a 10 by 20, I'll give you two 10 by 10 side by side. I'll discount it, I'll do this. And I got in some doozies, in our town. We have the county jail, not always the best winners. And I think I made it too easy to rent. So it took a couple months and nothing bad, just a lot more people leaving trash and abandoning units than we should have had. But we cleaned it up. And now it runs phenomenal. It's still, even to this day, we only have 4 units available at that facility.
Jeez.
And now handed it off. So we don't, I mean, handed it off at like 4 or 5 months right after that.
Okay. Now, you bought facilities and you built facilities. What are the pros and cons from starting that way? So not just the pros and cons in general, but saying, all right, I'm going to get started. Now that may be simply with one, you already have a facility or two, but like, okay, if you're still newer in the game and everything, building versus buying.
Boy, I tell you, if you can do your own marketing and just buy, I really think that's where you should start.
Yeah.
It relieves a lot of that stress and of like having to fill up and getting that burden off of you. There's just more unknown when you're building, as you know, like, I mean, there's just more unknown. And I mean, we were very fortunate. I also think we had a good time. I mean, clearly we're still in a good area because we're maintaining our occupancy, but I think we were in a great time to also fill it up. And I think you should, I mean, really honestly, I think you should buy unless you're very confident in building or have no other option. Like I understand if maybe you've been trying and you can't find an existing one and you find, like we did, really cheap land and you really believe you can go for it, then I understand. But it is easier to get a facility, even if it barely makes any money. It's still not negative, when you buy it and you get to go forward with that expansion
and
plan.
two, it's time. I mean, how long from buying the property to, and you filled up astronomically quick. Normally you're looking at years. But what would the time frame look like?
On the building was a long time because we had in Oregon with wetlands, they had also laid off some of the state people. And so we had crazy stuff like this. Like we turned in our application. They have 90 days to reply to you. They weren't saying anything in these 90 days, just on an email response, AJ. For the guys to know how to go. Nothing. We are asking the consultant, come on, push them, see if you know. No, they have 90 days. At 92 days, he reaches out and the lady goes, oh, I didn't see that. I'm going to need another 60. just to answer a question.
Jeez.
So it was 5-month delays. Oh, and then we ran into an unrecorded easement on the property. The power company had an easement. It didn't get recorded from 1970. And so then we were planning to build units there and we had to change it. So we hit it was over 2 years of planning, 2.5 years. So that's the other thing I don't recommend. I mean,
That's interesting because I guess
2.5.
So I've never had that happen where it was, there was an easement, but it wasn't recorded anywhere. So nobody knew?
Well, what happened was when the city formed and all this back in the 50s, the power company put their easement.
Yeah.
Well, in the 70s, when they sold it, they forgot to put it on there. They missed. Well, the property sold 5 times, but no one built.
Yeah.
So what happened was no one really got deep enough to find out about this easement.
Well, and
so
that's actually how they do it. We found this out, which was interesting because when we were doing we were looking at the easements, the guy that was that you have come out to look at the easements, verify everything. Basically, all he does is look at the last one.
Yeah.
So he just looks at the last one was recorded. So we had an issue where they'd messed up on the last one, and they were saying the easement was huge. And we're literally out looking at the property, and I'm like, it says the easement goes out of here, but the water's over there. And I'm like, that doesn't make sense. And so if it wasn't for us, we would have lost a huge section, and we had to go back and tell the guy. And he's like, well, I just looked at the last one. There was this drawing, right? Done.
Yeah.
And they actually looked back, and it was like, no, that easement isn't like that at all. So 5 times, though, I mean, that's a lot.
It's a lot.
Going back, I don't know how you.
Well, they went back 3, but it was done on the fifth one in 70s. And so they all think it was fine. And it was the dang engineer. He came out and he's like, I don't think you can build there. And I go, what do you mean? He goes, well, I'm just positive there's going to be an easement there. And then I'm like, well, actually, it does make sense to me. I hate to say it, but I mean, it was like, it started clicking in my head. We weren't thinking about it.
Yeah.
But then I see these parallels. I'm like, there probably is. Well, just like you, the easement was 25 feet back in the day. They wanted 50. Now they wanted 50.
Now they wanted 50.
So we had this whole thing we had to negotiate. I think we settled at 30. We tried to file a claim against the title company. They're so big. That took 6 months. And at the end of it, including like property appraisers and this, they were like, here's $5,000. And if you want more, go feel free to sue us. And it was like, oh my God. I mean, you got nothing out of this, even though it wiped out this chunk of property. So when I tell you there was all these problems, I mean, I feel pretty confident in building now. I don't think I'm going to hit that many.
100%. Yeah. You know, and two, it's interesting that if you're building, guys, that's the nature of it. I like, you couldn't expect it doesn't matter. I mean, we've never had a project that we were building that was, first of all, just ran smoothly. We didn't have issues. Like, that's not how it works. No. So I think a lot of people look at building where they just say, oh, it's cheaper, which most of the time that's not even true. They're not including lots of numbers. And then they get done with it and they're like, $1 million build ended up being $1,500,000, and we got no more for it. We just didn't understand everything else that went into it. We're building a project in Arizona, and our fees to the city are $500,000.
Yeah, right. Like, those are so hard to predict beforehand.
Yeah,
that's the other thing. Like, not
really
until you have designs and building and all of this, and you're like, you're already $80,000 in. Does the city even want to give you a quote? Yeah. I mean, that is the difficulty.
And then they start telling you what not only quote what they want predicated on this, and then they'll tell you, you need to give us all the information before we tell you what we want or what we're going to require. And then they take that and they just start picking it apart. Mm-hmm. And so, you know, there is a lot of risk, but I think vast majority of the time, the risk is that you're planning on something to be really smooth and simple, and it's just not. So you just need to realize going into it, like you said, I can build anything now because I know that there's going to be all these problems. So you understand going into it.
For sure. And
this
I think
is
that
going to be work.
If you're going to build, the few pieces of advice I'd have is, like you said, just prepare yourself mentally. Mm-hmm. Engineer's going to screw something up. Yep. Civil's going to screw something up. They're going to have a delay. It's going to cost you more money.
Always.
Like, you just have to be prepared for it. So I also wouldn't go into it if you're down to your last cent or you don't have a strong income.
Yes.
If you have a strong day-to-day income and you can kind of make up money each month, maybe as you go, and you really want to take that on, I think that's, I understand going into that. The other thing I would do is, and I know you guys do this, but a lot of the guys that I see getting really in trouble in building, because we've been offered a couple facilities, is they get enticed by those prefab building projects that just get dumped on a trailer.
Yes.
And what you don't realize is when you're buying this kit and they drop it off on a trailer, you now have to find a builder who knows how to assemble that.
Yeah.
And that will cost way more than just going with a company. Make sure if you are going to build, the company designs it, they manufacture it, and they install it.
Yeah.
It is all on them.
Yeah.
Do not do this, buy a kit and hire some local guy and his help to figure out how to assemble the thing.
Well,
it will cost you way more.
Way more. And not only that, we had a guy in our hometown that they said, you know what? We can do our own. I've got connections in China. We can get our own metal. We'll do our own manufacturing. We'll carve out this piece, right? And then they built this facility that they were so proud of because they did it at so much less the cost. And then they couldn't sell it because all of these problems. So nobody wanted it. They're like, well, this is wrong. And I can't fix that now because it was built this way. And all of a sudden, the value that they lost eclipsed anything that they saved on it. And I think you got to have a much bigger view, like you're saying, when you're doing development, both in time frame, but also what needs to happen and the scope of it. That everything that goes into it, because a lot of people go into development thinking that it's cheaper if I do it. And they look at people that are giving bids and they view it as simply a price game.
Yeah.
That doesn't work. Just because something is cheaper doesn't mean it's a dollar for dollar, right? Like you're mentioning here. So you really do have to take a whole.
Yeah, and the last warning I'd have depending on what county you're in, boy, our tax bill was the surprise from hell.
Yeah.
Let me just tell you, when you're buying an existing facility, and this varies state by state, but some states can reassess on the purchase. Some, it's set. Like in Oregon, it doesn't matter if you paid 5 times. Once that price is set, it reevaluates maybe yearly based on other comps, but it's not based on a purchase price. Yes. Oregon has changed some of that. So, but I know other states, and I think Washington. I'm not an expert on that. They all do it differently. Yeah. But when we built ours, all we had to go off of was also AJ. When we built ours, the wealthiest guy in our county built across the street 4.5 times the size and opened 9 months before us.
Oh, man.
So when we filled...
And you still filled up in...
Everybody... Wow. I mean, brokers were going, you're crazy to do this. Yeah. And I said, well, I'm this committed. Yep. We're going to make this.
We got to go now.
Yep. So, and he builds beautiful facilities. Let me tell you. Beautiful. Like concrete, everything. Cinder block.
Yeah.
Like top.
Above and beyond on all the expensive stuff.
Yeah, all the expensive stuff. So he does it. And so, there was a little bit of nervousness, but I was looking at his taxes because they had just been issued, right? Mm-hmm. So I know he's 4.5 times the size. I can look at aerial maps and all this. And so we're judging where we're going to be. And that would have put us around, we were hoping we'd be at $35,000 a year.
Yeah.
We figured we might get hit at 44, something like that, 45, $84,000. And now you're fighting like heck. So that's the other thing I tell people, like there can be more meat on the bone building, but there can also be more surprises.
Absolutely.
And we're fortunate that we've done a good enough job to continue to push our rent up that we basically wiped out that tax bill. I mean, we're averaging more. A year later, we're averaging $7,000 a month more than we were the previous year. So it kind of covered that tax bill, but that was a surprise, man. I mean, a $40,000 surprise.
Yeah, double your height estimate.
Are you a new self-storage investor and want to know what that facility is worth, what the risk is, how to underwrite it? Well, that's exactly what we do in a feasibility study. A feasibility study, we actually look at the market for you. We look at the finances, the underwriting, we show you where the upside is, the downside, and all the risk. That is actually what you can provide to banks to get capital and investors. It's a big worksheet, which most banks actually require. So if you want to know what a storage facility is worth that you're looking at, come to us, follow the link in the show notes, and we will tell you.
One of the biggest things that I see today with building that is a big issue. And a lot of people don't realize, first of all, we're at the like highest building cost ever in storage. And we have not seen any dramatic easement off the highs, right? So yes, it's come down a little in some areas, but not significantly where it would change a ton of things. Yet a lot of these markets, rates have significantly come down. And one of the problems you have with building, like we were talking about, is timing. So what worked 2 years ago,
For sure.
all of a sudden the bank says, we'll give you a construction loan predicated on this value, everything else like that. That makes sense. Well, you all of a sudden get the construction done, you need to go into a perm, and they look at market rates and say, oh, market rates, street rates, right? So people are giving discounts, everything else, they're down 30%. That means we're taking 30%, maybe more. No, actually, they would take more because cap rates have gone up. So 30% gross revenue down, and also the valuation we would give you isn't as much because we're not giving you a 6 cap anymore. It's now a 7 or whatever that is. And you just lost 40% of the value of your facility on paper, air quotations, because the bank is now looking at it 100% differently. And now they look at you and say, oh yeah, you need to put down, you that 30% that we had that was either going to be in equity and everything, that only is 10% now that you have into it. So you need to come up with another 20%.
To go to perm, Otherwise, you're going to pay these continually high interest rates on this.
And a lot of people are shocked by that now.
Yeah.
And it shows that what you mentioned, things change, right? And when you take that long-term view, you can be, but cost didn't come down. So all of a sudden you're sitting here at the highest cost ever. Rates you thought maybe it was, you may say, okay, this works because I can get $1.50, right? And now you're trying to deal with this new reality. You're trying to convince banks that it's okay because street rates and in-place rates are not the same thing. But the banks are zeroing everything out. They're being conservative. They don't care. And so now people are having to come with more cash to the table and everything. What it means is just you hit on that point. If you do not have free cash flow, if you're down to like your last penny or you're like this, you're not able to adjust for changes.
I don't think you should start in building then.
No.
Buy an existing, do that. Because we've also done that.
You can see it that time. And up until you actually close on that deal, you actually can get out of it. Right? Now, you may cost you after your money goes hard, but you still can. And we had a really big portfolio we were going to buy. That portfolio, the owners had underwritten in there, the taxes on it, was whatever it was, $300,000 or whatnot. And we were going to buy it. So we said, okay, the first thing we asked before we went under contract, we said, we're okay with your price as long as these taxes are correct. To which the broker who put the taxes in said, they are, trust me, I know this area, everything else like that. And we said, that's fine. Then we're okay with the price. In that time frame, interest rates doubled. And we also found out that they had underestimated those taxes by, it was twice or more than the taxes. So we're going back and you're $300,000. That's the difference. We literally, I look at them like, that's the difference of 2 of your entire facilities. It's as if we are buying 2 more facilities that we're not getting. Right? And so we walked away. And we could. If you were building, though, you don't have those abilities to.
Or you just don't know. Some of these places are so hard to get you like a real estimate. They really
we've never
don't.
Gotten it.
No. They say you can talk to them, but that doesn't seem to work that well. The other thing we did is we bought a really old one, right? And then did the full value add. And I mean, it needed a lot. Like this place.
CapEx?
Oh yeah. So this place was built, there was 2 phases. One in the late 70s. He was an early guy into storage. And then one in the mid 90s. And that was all climate. Okay. And they were, it was 5 buildings. And it was a yellow and white steel back in the day. And it had faded to like man, the worst yellow. It was just terrible. It was like chalky and, like it really had been out forever.
Yeah.
So that one we bought, but it was a really good deal. They hadn't raised rents in forever. I mean, they were 50% under everybody around it. We really believed in it. But that one, we ended up doing new roofs on 4 buildings, new gutters. We had to put bollards. We painted everything, new fence, new electronic gates, new professional security system, cameras, LED, everything. We had to fix the well. We did this. But again, that was... Even though that cost a lot more, that one, we were able to put all that money in, then refinance it all back out in a very short period of time. But again, as I think, some of your guys had touched on, that came because we had good relationships with the local bank.
Yeah.
They saw what we did, and we've done other loans with them, small loans. And I think that's the other point to people, those little residential ones that we don't care about. Also, though, built some of our track record with the local bank. And so we put all this money in. We're like, hey, we really want this out. Look, we've raised rents, 50%. We've done all of this improvement, and now it's stabilized. And they they said, well, let's see if you get it reappraised. Well, reappraised, it came in very, more than high enough. And so they're like, well, they're like, we've never given someone in a year all their money back, right? Because basically it was like everything we had put down, we still had a little more money into it, but essentially it was all of our money down and some. And it was a little hard on the bank because they don't like that after a year. They usually want 2-3 years, whatever, but they did it. We worked on it and they did it, and it was perfect timing for us because it locked in a better interest rate, kind of had that money back. And that facility is doing great. And the newest one we bought, it's immaculately maintained, doesn't need anything, but it has room for expansion. Yes. So we're kind of doing all of them, ground up build, a full value add, and then a really nicely taken care of facility that has
expansion
room for expansion.
I love it. I mean, those are my 3 focus areas. And the nice thing about it is, it's kind of, first of all, a hedge. Because the acquisition, almost a hedge against development when you're doing it, then you have the expansion, which is kind of the best of both worlds, right?
It's a little better.
And so it's, there's a lot of ways to go about this, and you've taken all 3 routes.
But to your point on that, when we're talking about this with people, I feel like as we talk about this, it's almost like all these, sometimes terrible negative things, but really the truth is storage has been awesome. That's why you're in it and we're in it. But I think there reaches a point, especially if you're starting on your first, you can analyze, you can look at stuff, but the more you look at some point, you should start to have this little feeling like the numbers look good and you just have a feeling this is the right one. And then you are going to have to take that chance, right?
Absolutely.
You are going to have to buck up and go for it.
Do it.
And do it.
100%.
And figure out from there. And I think I see too many people that ask me well, it was close. Like the recent one we just bought.
Yeah.
This is the best story. We're driving home in the car from the place. And we paid $2.4 million.
Okay.
The one we can talk about that. But we paid $2.4 million. This guy calls. Kind of weird phone call. Hey, is this Matt, the new owner? And I'm like, yes. And I thought it was a tenant. He goes, that's going to sound weird. And I don't really know how to ask, but I just need to talk to you a little. He's like, seemed like a pretty good deal you got. And he's kind of slow rolling this. And I'm like, okay, what's it? He was like, well, I actually sent that owner a postcard 5 months ago and I got him to agree to sell it to me. But I couldn't see the value. And I said, well, what did he offer it to you at? What'd you agree on? $2 million. And I said, well, that's the shit. I said, let me guess, it's your first facility.
Yeah.
And he said, yeah. And I said, see, I'll explain to you some of the things you missed, but because he felt it was good, but he called some mentor who was doing storage in Georgia, but their price per square foot's nowhere near. That guy had never paid that number for something. They're renting 10 by 20s for $225. In Georgia, he's renting them for $100 or something, in the middle of nowhere.
Exactly.
So he couldn't comprehend how it could be worth $2 million. And I said, because you called on the wrong mentor and not the market.
Yep.
And I said, and you also didn't look at the house that was included in it, how nice it was. You really weren't looking at how much that expansion would make you. So we kind of walked through it, but it just goes to show you, here was a guy, he had the opportunity to get even a way better deal than I got.
Yep.
But he just couldn't quite push himself into it. We would have lost.
Yes.
He had it locked up, but because he wasn't willing to close, the guy moved on to the next.
Yeah. I love that you hit on this. And this is actually a big problem, and it can be a big problem for everybody. And like, Matt, I've talked to you about, I had 1 year, I think there was maybe not a full year, but it was about a year where I didn't buy anything. And the major driving reason is we've been in the game for so long, and all of a sudden cap rates dropped. And cap rates dropped, and it was like, that's not worth it. It's not worth it because I've been buying for a decade this, and you're asking this. And so it was so different, right? And I felt like I was getting a bad deal.
Yeah.
And that was one of the biggest mistakes I ever made. Because first of all, I was doing it on emotion, meaning my buy box and my metrics didn't change.
Yeah.
I still would have gotten the return that I wanted.
Yeah.
I was judging it though, because of that price difference. And to me, and I feel so many people do this. Well, I can't buy this house. This house is worth $200,000, right? I mean, my house only cost $100,000, and that was 6 years ago or 5 years ago. Yeah. So they don't pull the trigger on it. And you see this a lot, and millennials were the worst at it, because when housing prices rose in 2000, like 15, 16, all the millennials said, oh, we're going to wait till the housing market crashes again because I'm used to houses being penny on the dollar. And then none of them bought. And guess what? All of a sudden, 5-6 years later, they're trying to get in, and now they're trying to buy. There's no more houses. Yeah. Houses have now gone double from what they were. And you're looking at it going, I mean, during that time, there was a whole culture about not buying houses.
Yeah.
Like they were proud about it. I mean, I remember people saying, you're stupid if you buy a house. People told me that because I was building a house, and it was 2010 or 11. And I had like people were like, you can literally buy a house cheaper than that. And I'm like, yeah, but the land and this, and I'm not looking at it as an investment, right? But it was an emotional state of being from something that had happened in the past. And and me looking at all those people saying, oh, you're dumb. And then I went and did it in my own business. And I'm like, oh, crap.
None of us are immune, right?
No, none of us are immune. And first-time home buyers, first-time investors, the problem is you don't have that experience.
You don't.
So then it's even worse.
But that's why I tell him, is like, when you get that, he had that gut feeling.
He had the feeling. He knew he should have.
He knew he should have. And he had done his research. But he went and asked someone else in an entirely different market. That's also something you have to be a little careful on. In an entirely different market. It's like someone who sells houses on Coeur d'Alene, like Lake, versus someone that sells in the middle of Wisconsin. Like, they're not, you can't comprehend the value here. Like there's no, they might both sell real estate, but they have no idea the value between the two of them.
Nope, totally different.
And so that's like, would be my big tip to people. It's like, you will have this moment where you've looked and you know it's right. And if you really want to get in, you're going to have to do everything.
Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class. When dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process, they are bar none the best. So if you are looking to automate your facility or operate it in a best-in-class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description.
So on this most recent deal, we thought when we were buying it that we were going to be able to do just some traditional financing. And we weren't aware of all the sellers. He has some extreme medical things he's going through, and his life condition didn't allow him to take that time. He really needs to close quickly. Yeah. So we had submitted an offer, and we're pretty excited, like, oh, I think this is going good. And we knew the brokers really liked us because they're ones in our area. They really work closely with us. And they just call me back on Saturday and say, yeah, no, I think you're going to be the backup. And I go, no, that's not what I want to hear. I don't want to be the backup. Yeah. What happened? And he goes, well, they got an all cash offer and they're willing to close in 17 days. And I was like, has he already decided? He's like, no. And I said, well, when are you meeting him? They're like, well, we're officially meeting him Tuesday. And I said, so you're saying if I have an all cash offer by Tuesday, I can be still in the running? And he goes, I mean, yeah. I'm like, okay. So I got off the phone and man, I just start calling everybody.
Yeah.
I mean, through all my contacts. The thing that surprised me the most, AJ, for me, I've never asked for money.
Yeah.
I was surprised at how many people would have gave me the money if they could have been partners. Okay.
Yes.
That was the first thing. They wanted equity.
Yep.
And I understand because they need tax burden, but I had 24 hours to figure this out. I didn't really have time to restructure and figure out how to do that. But that was actually kind of made me feel a little bit better in the future if I need to. I kind of knew there were some people, but they didn't solve my problem. So I called all these people and it was kind of like, no, mail, no. So then I start blasting George and everybody like, I need AJ to look at this and tell me if there's someone they knew. Well, then Ben called.
Because Matt's in my inner circle.
Yeah.
And so we're talking. So
I'm blasting George and all that because I know AJ's busy doing other stuff. And I'm like, look at this email now. Like I need it now.
Yeah.
And
then Ben on our team.
Yeah, Ben called. And Ben's like, well, what are you looking to do? So I explained the situation. I said, we have money that we're willing to put down. It's just, and I know it's going to, and he goes, in Ben fashion, let me just tell you what this is going to cost you before you even, I said, yeah, I borrowed a lot of hard money. I'm well aware there's fees and all this. Like, let's just I need the money. I need it. Let's go. He goes, all right, well, let me make a call. And sure enough, he called someone and the guy calls back on Tuesday or Monday and says, I'll do it. I said, really great. So I called him. I say, I got you an all cash out. They said, really? They're like, well, now we need a commitment letter. So I said, Ted, I need a commitment letter. That's the new lender. He goes, okay, sends it over. They called me back. They go, this isn't going to work. And I go, God, what do you mean this isn't going to work? They're like, well, he put all these outs in here. It looks like he doesn't even want to do the deal. His legal letter has all these outs and you're competing against. So I'm like, Ted, I need you to take these all out. He goes, do you know there's a reason we put all those in there? Legal reason. He really didn't want to do it.
Yeah.
And, we came to a good understanding. I think he realized we weren't going to try to, give any repercussions to him, if something fell apart.
Yeah.
And he did it. And basically the brokers confused the owner. Not going to lie, that wasn't the end of it. So now all of a sudden the brokers were fighting so hard for us. The owner's like, well, now I don't know what to do, right? Because he just looking at these two. And they knew, at this point, we were in Chicago, my wife and I.
Yeah.
And we said, we will fly back that next day to meet him.
Yeah.
And they said they got him to tell both parties, us and the other one, he'll make his decision in 48 hours. And they called me and they said, well, you're going to be there in 32 hours.
Yep.
And it's going to be on you to get him to go.
To get him. Yeah.
To go. So we flew into Portland, drove up to meet him.
Yeah.
Spent the day with him and got him to sign that day,
That's awesome.
It was like this whole crazy number of pieces.
Yeah.
But when I say to people, like, you have to be that committed.
Yeah.
Oh, there's moments you start second guessing. I mean, we didn't have a long time to look at this. Yep. We had to really we were taking some advice. We were looking at what we had done. We were looking at those rents. We were looking at this place is 100% full, all the time. We knew there was still some rent growth. And it took about 85%, of our extra cash we had set aside. So, that's a little nerve-wracking.
That is nerve-wracking.
And you have to make that decision in, 13 days or 14 days that we closed. So, if you're going to be in it, you're going to have those moments, you're going to have to.
Couldn't agree more. And I think this is a perfect example too. People are like, how do you find deals? And I'm like, we sweat and bleed and crawl over glass to make deals. Yeah. We don't find them. They don't just stumble on my way to the office like, oh, look, a deal, right? No, that's what it takes. And that's the behind the scenes stuff. And of course, it doesn't always take that. It's not always stuff, but that's what you have to be willing to do because the other people that are going to get the deal.
Yeah.
So, and two, little things matter like a lot to sellers, and it can just tip that balance over, right?
Yeah. These outs in the letters,
it can mess everything up. And it was even like that. I mean, your ability to call Ben up and get the money, right? And which anybody that wants to talk to Ben, follow a link below. He's the guy that does all our debt and everything. But you need to be prepared, and that's the thing is you were. You knew. You could call George. You could call Ben. You knew what your buy box was. You knew your market. So if you stack too many things against you that you're not prepared or, you're wishy-washy about, then all the things, because there's no perfect deal, it'll never be clear. That wasn't a deal that was just simple. That was just like, because that doesn't exist. And so if you're not, then all the things that you don't know, when you have to decide that gut feeling, we have to do this, you're not ready to, and you can't make it. And then all of a sudden you're in a position to where you can never move forward. You knew the markets, you knew what you were trying to do. You were willing to do it. You knew who to call. You'd been preparing. So then even when there was the unknowns, but you knew this is where we want to go, everything else, we need to make the decision to do it. You were able to execute. And it's not that you were, I don't know, the other buyers were obviously well-funded, everything else, because they just came in and said, we'll pay for it in cash, right?
It was their
you
own
had to figure it
personal
out.
funds. Yeah.
Most people would say this, well, they're going to pay for it all in cash. Well, I guess we're out. Okay. And that would have been the end of it. They would have just stopped, right?
Yeah.
But you said, no.
No.
Okay, I'm going to call. Let me figure this out.
I got 48 hours.
Yeah.
I got a Sunday and a Monday.
Exactly. So, no, I love that story. And I think it's really important. I mean, what you guys don't see behind the scene on deals that we're doing. I mean, look at this. We had a deal that was going to auction. It was owned by the state. It was in Boise, and everybody came, and the state did an appraisal, and they appraised the facility. I can't remember the exact number. I think it was $3 million. So everybody came, and then this is including REITs. And when we were looking at it, we were like, that doesn't make sense. $3 million, cinder block. This thing was like 80,000 square feet.
We're like
never in this area.
Yeah.
And so we're like, hold on here. So we went to work, and we went and got all the comps. We did we looked at it, and then we went and actually we talked to a bunch of banks, and we went and got our own appraisers from the banks to appraise it. And we shared with the appraiser, here's our numbers, here's what we're seeing. And he took it out, and he came back and of course appraised it way higher, more closely to what we saw. They were saying it was worth 3 to 4 million or something like that. And we're sitting here going, this is worth 8.
Yeah.
And so we went in. First of all, we thought everybody did that. And then we bought it for 4.5. We were the last one sitting there, which I kid you not, we didn't expect to buy it because we thought there's no way, because we knew it was worth 8. We went in, and me and my dad were sitting there. I was talking to him. I'm like, we're never going to get this. Yeah. But this will be fun. So we went.
Yeah.
And we're bidding. We're like, oh yeah, this is fun. We're bidding and everything. And all of a sudden, everybody started disappearing. And we're like looking at each other like, oh my gosh, like what's going on, something? Right? Yeah. And there was just us, one last person, and caught it. We got it for $4.5 million. And afterwards, somebody came up and they said, how were you willing to pay so much more than what it was worth at $3 million? And I looked and said, no, it was worth $3 million to you, but not to me.
One person's opinion or something, who's not a storage expert.
No, and what the state was doing was the state doesn't care about even money. Yeah. They don't care about how much money they make. They care about the fact that they can say we did a good job. So they appraised it low, so they knew it would sell above it, because what the state printed out and what they put in newspapers and everything, of course, in typical government fashion, we got a buyer to pay $1.5 million more than it was worth. Because they got an appraiser to pay nothing. That facility today is well worth over $10 million. We averaging rate increase the next day was 65% rental rate increase. Within 4 months, that facility was worth $10 million. Wow. We had basically doubled the entire revenue, and we were at a higher occupancy 5 months later than they were at 92.
Wow.
And it's like, you look at that and you go, that wasn't that hard.
Yeah.
And 2, for us, we thought everybody should have been doing that, but nobody put in the extra little bit of work. And just like you didn't want to do the extra little work. And it's those little things that give you a competitive advantage. And we didn't know. We didn't know. We had no guarantees, right? There was lots of unknowns. This was an auction. We didn't get it was a state-owned property, right? So just like you, it was
when we gave our
unknowns.
offer, we hadn't seen it in person. I
Yep,
had
there you go.
trust in the people that I knew we were talking to because we had really got to know them. And I'm just going in my head, like, I knew though those numbers in that area and,
Yes.
some of these things that like,
And that
there's
was
a
us.
whole bunch of little things that I kind of knew over here.
We understood this, and you understood, okay, this is valuable.
Yeah.
I may not know everything, but I know the important stuff.
Yeah. But I mean, that was nerve wracking when you're going, oh,
Yeah.
we basically just gave them like an all cash offer and something we didn't see. And think
That you didn't even have.
that, yeah.
Yeah.
And so but here it is. We now have it. It's actually made even right out of the gate a little bit more than they'd even predicted. I think they were doing everything by hand. That was the other thing too. So the info we got was pencil and paper ledger.
Yep.
And even as we got into it, no, it's not that big of a deal, but there's just like, crazy annoying things we're doing
You're like,
by pencil.
I don't know. Okay, is this totally correct? Is
They
it
had
not?
3 books and they would be slightly different. So we had to give some people credit in this just to try to get to match because they'd have here they were paid through, here they weren't, here their rent was
not
100. Here
simple. This wasn't clear. This wasn't a broker packet perfectly everything as it is.
Yeah. And so that was kind of what we had to go off of. But I knew based on the square footage and some of the other things, and in asking, I'm like, and here's a key, for someone like if they're doing it, this might be knowledge you have in your area, and these are the edges you have. It's on the coast, and the coast destroys everything, right?
Yeah.
Like that. It'll rust anything. It'll cause mildew, mold. Well, this entire facility is heated, every single unit, including exterior. And when you go there, there's no smell. There is no mustiness, no anything. So what I knew was they are the premier.
Yes.
And many people had said like, that's why we're here. And they don't even care if they pay more because it's kind of like if you store your stuff on the coast, it's either like you better store tools and stuff that you don't care smell bad.
Yep.
Or you better have really high-end storage. Because if you put furniture and an outdoor thing that's lit, because this is on the coast, it's just a matter of time and it's no good. And so there's lots of people though that store household goods and there's really no smell. And so I just knew like the cost to rebuild this, especially the way they heated all of them, it'd be a fortune. And I knew we were in good on that. And then, it had the room for expansion. The last thing was we called the city right before our money went hard.
Yeah.
And told them where it was. And said, I just want to ask you some questions about building here. And I never had a city be easier. I mean, literally the response, generally, if you ever call a city, it's like, well, if you submit preliminary plans, we'll schedule a meeting. Well, I could get you a builder or planning guy on the phone, but everybody's vague. Nobody answers anything. Nobody wants to give you concrete anything. We called them, said, here's the address. Oh yeah, I know where it is. Okay. How close can I build to the lot line? Oh, you can build right on the lot line, but we don't prefer it, 5 feet off. Okay, what if I want to do this? What if I want to put a road? It's your property. Do what you want to do.
Yeah.
Do I need to put a bathroom? No, you already have one. And I was like,
Okay.
whoa, direct, easy. Knew they weren't going to do it. So I also had just that feeling from my experience in building. So these are where like those moments come.
Yes.
And you just have to go for it.
They start painting that picture of how we can execute and how we can get this done. But at the same time, it wasn't.
No.
You had to go with that. You got to just do it.
Yeah. And we're still going to see how that works out. We're not building yet. I mean,
Absolutely.
I just have that feeling that it's good, but
Yeah.
we're going to see this next year as we try to expand how well that actually goes. But
Well, I love it. And these stories, I think, are helpful for everyone. And for those of you listening, once again, that have lots of facilities, don't forget, you still make these mistakes, as I learned. And I know that I do. And so it's important to remember this stuff and look at it and be thinking about that. In fact, I think it's opposite. I think the bigger you get, sometimes we get overconfident in numbers, and it's like it's almost too much.
well, do you feel that you can you get to a point where you're making enough you because you can afford to make some mistakes? That maybe it gets a little looser and a little.
Yeah, there's definitely, the Statesman deal, things like that, right? So we go back, we feel more confident, things like, because we knew we have a buffer, so I'll pay for that in cash, right? But then there's other things that we come to expect because it's easier. And so it's like, well, if we would just do a little more, we'd maybe get a better deal or, things like that. But these are mistakes that we all make. These are human mistakes. And at the end of the day, it's because there is no perfect runway. It doesn't exist. I don't care how good the broker is. I don't care and you got to remember, if the broker's like, oh yeah, this is perfect, here's pro forma, everything else like that, they're just putting numbers into Excel.
Yeah.
I mean, I don't mean anything bad. I'm not saying that's bad brokers because we do it on our pro forma and everything else, but it will never play out that way, ever. It will never go the way that spreadsheet says it will in year 1, 2, and 3. It never has, it never will, because that's impossible. You're talking about individual tenants, pennies, dollars, expenses that you don't know.
Yeah.
It will never happen. And so there comes to this fact that you have to accept that. And you have to move forward regardless, or you just will never do anything.
Yeah, no, for sure. Hey, have you done this with any of your facilities, gone to like full automation on one of them?
Yeah, we have 2 full automation. We've got in 2, even like, and this is the thing that I try to talk about a lot. Like, even if we have a person on site, that doesn't mean it's not fully automated. Okay. So like we have a manager at our sites, but somebody could go rent everything. They never even need to talk to a person. Yeah. So if the manager's not there, we're still renting, right? It's just they're so big that it's like we will never not have managers there. Our Reno facility was a perfect example. Everybody was asking, and we're like, this thing is, and we're expanding it now. We're like, this is 100 and whatever it will be after the expansion, 50, 60,000 square feet. Oh my gosh, we have a road that goes through the middle of it. We have, how many exit doors do we have? 15 entrance and exits. We're like, we will never not have a manager. Yeah. And the revenue that we get compared to what we have to pay the manager and what we get out, it doesn't matter, right? So logistically, we will not ever have that fully automated because of, certain things. That doesn't mean it's not though fully automated.
Yeah.
Right. So we try to set up every single one of our assets that we could pull our manager out. And it doesn't matter. We're still getting rentals. Now we're merging the older ones onto that, and we're trying to get there. But that should be a standard, I think, for everybody. Whether you have a manager or not, it should be fully automated.
Yeah, move to where you can do it.
Absolutely. Yeah, because you don't have a manager there all the time.
Yeah, so, I mean, in smaller ones, we're really just finding it's not necessary. I mean, we just use like a maintenance guy, and
absolutely.
People ask, how do you find it? And I was like,
our 2 ones that we're talking are smaller ones. They're under 50,000 square feet. If I'm doing something that's 35,000 square feet, there's no manager.
No, just fully automated.
Absolutely. Yeah. It doesn't make sense at all. So, dude, thank you for coming on, man.
Thanks for having me.
This was awesome.
It was fun. The event's been great.
I love having you here. We met 2 years ago at the event, and I think so much of you and your wife, and your little girl, absolutely adorable. So thank you for coming on, sharing your experience. You guys are rocking it, and look forward to seeing over the next year how your new one comes out. More importantly, how many more deals you get.
Yeah, let's see. I mean, we're already looking at 2, so we'll see what happens out of that. But we're always working to get some more.
Awesome. Thanks, man.
Thank you.